Hello and welcome to another episode of Vagabond VC. I'm currently still in Cape Town, South Africa, and I've been thrilled to have had the opportunity to meet some great people in the startup ecosystem here. I'm excited to publish today's episode with my guest, Bongani Sithole. Bongani is the Managing Director and Chief Scale Officer of Founders Factory Africa, which is a venture builder and accelerator. Bongani has some very insightful opinions about the African startup ecosystem. He's based in Johannesburg, so we conducted this meeting over Zoom, and there are a couple of instances where the audio skips due to some connection issues. These are minor and certainly don't take away from some of Bongani's great views on the African ecosystem. So, without any further delay, I bring you Bongani Sithole. Okay, everyone, I am here with Bongani Sithole. He is the Managing Director and Chief Scale Officer at Founders Factory Africa, located in Johannesburg, but investing all over at the African region. So, Bongani, welcome.
Thank you very much, Zep, and it's good to be here.
Of course. So let's jump right in. So let's start with you. I really just want to get a brief introduction to you and your background, how you got involved in venture capital and startups, and what led you to your role with Founders Factory Africa, where you're now the managing partner.
Good question. I've got 20 years experience in the space from a school background. I've got postgrad in computer science and really started in this space as a software engineer, progressed quite a bit in a short space of time. And I think after a couple of years, I then decided to essentially start my first business. That was in 2008, 2009, thereabout. So over the last 15 years or so, I started 3 technology businesses. I love working with founding teams, building high-performing teams across Africa. I've worked with blue chip companies, building products for them. So really my skill set cuts across between building businesses and understanding sort of like the ecosystem landscape across Africa and a little bit of, raising capital. So how I actually got to Founders Factory, my last business that I was building, we were actually building startups or products that would be converted into businesses on behalf of corporates. So typically what would happen is a corporate would have an idea, but they wouldn't necessarily know what to do with that idea, or anyone sort of like owning the idea to outcome. So we would take those type of initiatives, go to market and figure out if there's legs into the concept. And if there is, we then figure out how we can convert it into a business. So what I then saw as an opportunity starting here at Founders Factory was to do that at scale across Africa and really working with founders and sharing my experience across, that spans over the last 15 to 20 years.
So you have this entrepreneurial experience and you've actually built companies here in Africa. I actually want to talk to you about your entrepreneurial side of things before actually jumping into Founders Factory. So, what was that experience like actually building these companies here in the region? What were some of the challenges associated with that might be specific to Africa? And then also, how does that shape your experience in terms of helping some of these companies in Founders Factories?
Quite an interesting question because, and I would assume my counterparts and a few other people might have a different view. But South Africa, for the most part, is slightly different to the rest of African markets. And if you have predominantly built in South Africa, where infrastructure is a little bit much more structured than other African countries, you find that building a business in the context of South Africa, there is a little bit of structured nature. If you look at the fintech market or financial services, banking, for example, it's a lot more structured than any other country in Africa. You have well-structured roads, you've got, quite a good corporate structure, et cetera, et cetera. So to a degree, I think my experience of building businesses between the southern region and South Africa being specific, and now building businesses across Africa, I'm seeing that the infrastructure plays a huge role, and how corporates can work with startups and how you can actually break that trust barrier is actually quite different and key to the African market. So my experience in that, in sort of like a B2B space, and how a startup can provide services to corporates, it's challenging, but it's slightly better than other African space because of the well-structured nature of South Africa. Secondly, I think South Africa, because of how it's structured, it was easier to sort of like collaborate with other founders. It was, the ecosystem started at least slightly earlier than other African markets. So there was this sort of like nature of supporting, small businesses. South Africa, as a country, has taken a view of supporting SMMEs, view of like how over time we can be able to support the startup ecosystem. So it was challenging, but it was much easier in comparison to what I've seen in other African markets.
Let's jump over a bit to Founders Factory then. So you see these challenges through these different startups because you're now playing in all these different ecosystems, right? So you understand each of these different ecosystems in Africa through Founders Factory. So let's talk through what Founders Factory does, how the programs are structured, some of the startups that you look at supporting. It's not your typical accelerator. So let's hear how Founders Factory operates.
Yeah, so if you think about a juncture between a typical VC and a venture builder, in simple terms, that's what Founders Factory is. We are backed by corporates, so they deploy capital to us and we invest capital into startups off our balance sheet. And we do a combination of cash and services. On the services side, we deploy full-time staff who are with us. So it's not a contracting model, nor an advice model. It's literally deploying humans into these startups. Typically, a startup would get like 5 to 7 people. That cuts across growth, investments, design, product, engineering, etc. So a startup essentially would get these senior people who, for the most part, a startup wouldn't necessarily be able to afford at an early stage. So that's the reason why we deploy a combination of cash and services, is because of the services side. It's more an in-kind services, but getting all of these skill sets working full-time with a startup for 6 months period. We have 2 programs. We've got Build and Scale. And on Build, we start concepts from scratch. We scan the market. We come up with an idea. We actually build it into a viable concept, and we look for founders or a founding team that can essentially take on that business. And we take equity into that business, and we then take it forward, right? We invest capital into it, and we put our people as well to build with a startup. For the most part, you find about maybe 2 co-founders, a CTO and a CEO, and they will take that forward, and the rest of the supplementing team would be coming from us. The second program, which is Scale, where we look for seed stage businesses that already have a team, they've got customers, they've got paying customers, early signs of revenue. They're still trying to find like stickiness on the market. They're trying to figure out like what are the key metrics they need to be thinking about to get to product market fit. So equally, they come into a program for 6 months. We work with them, we put in capital and deploying our team to essentially help them move further faster. All of these are within 3 sectors: Healthtech, Agritech, and Fintech. And our corporates are representation of those 3 sectors. We've got Standard Bank, who falls into a Fintech space. We've got Small Foundation that is investing into Agritech. And we have Netcare, which is a largest hospital group here in South Africa, investing into us through a Healthtech vertical.
Are these programs run completely separate? And what I mean by that is the build program sounds more internal. You're building these products from scratch, these companies from scratch. The Scale program sounds like you're getting some external companies that have already been built, and it's run like a typical accelerator. So is there ever a situation where a company that you are building actually moves on to the Scale program, or are they run separately?
They run separately. Previously, we took build businesses post, 6 months into Scale. But when you then think about a typical maturity curve for businesses, there is a gap between a concept and putting product on the market to what a scaling business is. So there's kind of like a 12 months gap in between. So what we've then decided is to separate the two within the same sort of environment where from a build perspective, we're building businesses for a period of 12 months. And then essentially they go out to market to, to start sort of proving their value. And then essentially starting to grow from there. We support these businesses throughout. So at some point, they keep on coming back to us and say, we need assistance with hiring talent. We need assistance with partnerships. We need assistance with investments and so on and so forth. So inherently, we support them long-term, but they don't necessarily transition from build to scale per se. And just to also add that our support structure, even though it's quite intense within the 6 months period, we actually support these businesses long term.
Yeah, that makes sense. And one of the interesting things about the way you run your program is, like you mentioned, there's not only the injection of capital into the business, but also with your team, right? So having legal support, having sales support, things like that. So when these companies finally get to a position where they're able to make these external hires, how does that transition look from having your internal team who are helping out in these specific roles versus like onboarding a new person? Is there like a framework that you use to make that transition happen, or is it just a company by company basis based on their needs? How does that support and transition look?
Yeah, so our program doesn't have predefined steps that says every business has to follow the same trajectory. It's a very bespoke model. So we look at each business on its own merit to then qualify how we're supporting it and what are the key things that we need to support them on. If you think about a maturity curve of any business, regardless of the stage, you always have problems. The idea in building a business is prioritizing what is important for that stage and figuring out what is the next milestone for you. So what we then do is we look at each business on its own merits to then decide with the business what is the next milestone that we need to reach with them. And then we work backwards and say, what are the key metrics that we all need to work towards to create a bespoke support structure in achieving those metrics. As such, it will help us to achieve the milestones that have been predefined. So no two businesses are the same. No two business models are the same. Take in consideration the diverse market that we operate within and the geographies thereof. So there's always like variations. So we work on a bespoke structure per business based on its need.
Gotcha. And based on the two different programs, do you have maybe an example of a company in one of those three sectors you mentioned from the build program that you want to highlight, and maybe one from the scale program as well that you've seen success with?
Yeah, let's talk about one of our fintech business, Triplo, which is in the logistics space. What they do essentially is moving cargo from point A to point B. They've built a platform that essentially enables cargo owners to move goods from point A to point B, and them being sort of like that online broker. And what they equally do is support transporters coming into the platform. They vet them, they give them tools to essentially manage their business quite well and effectively in how they can be able to move goods from point A to point B. Number two is they provide visibility for both the cargo owner and the transport owner. So for example, you could be a driver, but working for a particular transport company. So people back at the office, they can always see where you are, right, with the goods that you're transporting on behalf of the company. So there's a whole lot of suite of products that they have built to essentially make sure that there's transparency, there's efficiency, and goods can get to the other side on time. The last thing that they do is the biggest problem in the logistics space is the time it takes for transporters to be paid after they've delivered the goods. The typical standard period is about 90 days. So you can imagine how that hampers the businesses, because you're moving goods today, but you're only getting paid 90 days after. So what Triplo has done is they've created a sort of like a invoice factoring type of value add, where they're actually paying transporters on delivery, and they are taking a bit of a cut in terms of that advance, and then they are invoicing the cargo owner and getting that value thereafter. So it's a very, very growing business. We started this business 2.5 years ago. They've won like the best innovation awards in the last 12 months. They've raised capital. The business is growing now. They are currently focusing on the 12 sub-Saharan market. So that was a business that we've started literally from scratch, right? And we found a CEO, and then we continued to build, to essentially, find a CTO and the rest of the team that's currently there. So that is a business that is currently in the fintech space, and it was a built business that we've started from scratch. On the scale side, one of the successful business that's currently on Series A, it's called ASAC. What they do is they do motor financing. If you're smiling, I assume that you know ASAC.
So they raised a funding round through a crowdfunding platform called Republic.
Yeah,
and I invested in them through that.
So I don't have to say much, right?
We're already co-investors.
Awesome. So
yeah.
So I don't have to say much, but essentially, I mean, they are. It's a fantastic business. If you think about ASAC, the future of this business, it could essentially creating alternative assets for investors, where you start to think about. Currently, they're financing, motorbikes or boaters, as it's called in the East Africa. But when you think about these tools that enables micro entrepreneurs to build businesses that can move from financing a cell phone to financing a motorbike to financing whatever that enables a micro entrepreneur to essentially build business. So you could think of like the impact that this business is making just in terms of creating jobs, the number of people that are now being fed and alleviating poverty because of what they're doing. But 3 is, creating alternative assets for investors, right? People are thinking about like, where can I put my money where it's not going through typical structures of like putting capital in a bank? I'm financing a good cause, but essentially I'm getting returns out of it. So it's really an exciting business. They are growing, and they're now looking to penetrate a few new geographies outside Uganda, which is exciting.
Yeah, well, as you know, I 100% agree. They were one of the more exciting businesses that I have in my personal portfolio. So it's great to see that you guys felt the same way. A question on those are 2 really great examples. A question on the build side of things. So from the very first step of market research to actually finding an idea you want to tackle or a market gap that you want to build a company around, how does that process look in terms of timeline and just overall from start to finish of how you actually develop an idea and conduct market research to building a company around it?
Yeah, the timelines varies based on a couple of inputs. 1, the geography. 2, the type of problem that we're trying to solve for. 3, what will you need to prove or disprove specific hypothesis, right? All those sorts of things determine whether it's easier to get access to a customer to validate or invalidate those hypotheses, right? And accessibility of the market. So these variables play into how long it takes. But from a sprint perspective, we try and do it within a 3 months period in getting from like research to a deck that shows what the concept is and the potential of the market with validated research that starts to create hypotheses that when you now start to build, you are actively going out to now start to validate those hypotheses. So our goal within that 2 to 3 months period, it is not to have anything in users' hands. It is to get to a place where we have hypotheses that a founder can now take into market to start to validate or invalidate those hypotheses. In some instances, you need to pivot a little bit. In some instances, you find that it's what we thought is the biggest pain point. It's actually not, right? There's something else that could be an adjacency in our point of view, but it starts to emerge as a key pain point that we need to be solving for. So, I assume you understand the Bell process, but there's a whole lot of things that you need to do. So there's sort of like going broad and converge, and going broad and converging, you get to a place where you're now having specific sets of hypotheses that you start to validate. So once we get to that place, the first 3 months is ready to run those experiments to then figure out validating some of those hypotheses and starting to kind of like doing early type of prototyping. It could be paper prototyping to, no code tools or whatever. It just depends on an idea.
Maybe you don't have a number off the top of your head, but maybe if you could come up with a percentage, how many of those ideas actually make it from the idea stage to the stage where you actually are building a company around it and validate it?
Yes, that's a good one. I don't have the actual numbers. However, by the time we get to a place where we narrowing down, there has been a whole lot of focus areas that we looked into, right? So if we take and I'm going to give an example here, Fintech, right? So Fintech, you can separate it into two. There is infrastructure, which is like your mobile monies, your pay stacks, et cetera, et cetera. On top of that, there's services, right? Services is what you will build on top of these rails that have been created. So when we start to think about a concept, we think along the lines of, where are the gaps? Are these gaps service-based or infrastructure-based? And we create focus areas, right? Those focus areas could move from 2 to 5 or whatever case might be. We run with multiple ideas around that. And then we start to kind of like, narrow down and go broad and narrow down. Eventually we get to a place where we have maybe 2 concepts, right? And then out of those 2 concepts, we then further refine. And you find that maybe those 2 concepts can go through, or it could just be one concept that essentially goes through. So there's a lot of ideas that we play around with. There's a lot that we think can actually go through in parallel. And then as we actually go and validate, we actually kill some of the ideas. And then we get to a place of selecting 1 or 2. There's been, few occurrences where the original idea that we came with had to pivot when we started to validate on the market. We then pivot into something else.
Great. Yeah, I appreciate the insight on that. So let's shift gears here away from Founders Factory in your program more to the actual ecosystem, and we can discuss South Africa and also the broader African continent as a whole. One of the reasons why I was really excited to talk to you is because you have this experience both building a company or several companies, and now helping build companies as well from the other side of the table. So based on your experiences, both personally building companies and through Founders Factory in Africa, what do you think some of the misconceptions are in South Africa and in the broader continent on the actual ecosystem, the startup ecosystem and the venture funding ecosystem? What are some misconceptions out there about the ecosystems here?
Perhaps maybe let me ask you a question first around misconceptions between someone coming outside looking at Africa, or just Africa just looking at the ecosystem within, because there's a difference, right?
Yeah. Well, why don't we touch on both, if you don't mind?
Cool. So yes. So let's start internally, right? The misconception really, and I think it's starting to be way much better now, is the fact that building for one market could essentially translate into another market. And that's why you will see, and we're still waiting to find a unicorn that has been cross markets in Africa. And the reason for that is because of the African markets operate completely different. So most of the unicorns that you're seeing, it's coming from Egypt, it's coming from Francophone market, or it's coming from Nigeria, right? We still yet to see a unicorn that is operating in West, East Africa and whatever, right? Like, because of what they have built is actually cross market. So I think that sort of like cross sell, it's not easy in Africa because we operating quite differently. I've just done a trip recently to Senegal, and you start to realize, I mean, Wave is the first unicorn there. However, it's actually the way it's being built. It's a Senegal business, but there's argument of whether is it a Senegalese business or not. But the point is, like, when you start to see the culture there is about 8 countries between Senegal right through to Morocco that are operating the same way. They use the same currency. They use, for the most part, the same language, and for the most part, same problems in how they operate. So for that type of a market, you could actually build a business in Senegal that can plug and play into 8 markets. Whereas when you think about West Africa, where Senegal falls into that space, you can't really translate that building a business in Nigeria can plug and play into Senegal. But it falls into the West Africa type of space. Number 2 is that the support that is there between various markets, it's actually quite disjointed. We don't work the same. And I think that, we need to find a way of how we actually solve for that as Africa. 3 is regulation, right? Regulation in Africa is so bad that something that you think should work in Nigeria and Senegal or Ghana, it's actually not the same. Like, regulation is completely different in Africa, and I'm sure African markets. Why you don't know? There's challenges of, like, you need to produce certain types of documentation when you get to Nigeria. We are all in Africa, right? So why should we be struggling with such things? So there's an issue of regulation. We speak of this intertrade regulation, within Africa, but it still hasn't translated. So there's a whole lot of, like, subtle nuances that makes it hard to actually build in Africa. And I think people need to take those things into consideration in how they build businesses. And I think from an outsider perspective, one is there is this view that Africa is the next big frontier, which is right, but there is a nuance that one has to take into consideration. Which market are you going after? Right? Because of it works completely different. Number 2 is that, which sector do you want to focus on, and which sectors are still nascent vis-a-vis slightly maturing ecosystem. If you think about fintech, it's slightly getting to the maturity, followed by health, and then followed by Agtech, et cetera, et cetera. So coming from an outsider, you might think that the playing field is the same across, different sectors and different markets, and it's not. Number 2 is, I think there is a maturity that Africa still needs to get from a VC space. I think that VC in Africa, it's still very early. For the most part, when you look at some of these VCs, it's sort of like ex-bankers. It's not people who have built businesses themselves, ex-CAs and so on and so forth. So the way in which they think about valuation compared to the West and Asia is completely different. Forget the ticket size for a second and just think about, like, how you look at a business from a VC point of view. And I think there's a lot of work that still needs to be done, because of that in itself can stifle growth that we need, because they're trying to squeeze founders much harder than how a VC coming outside of Africa would look at it, right? So a VC would say, great space, here's 1 million, go and do whatever that you need to do. But when you start to think about, like, Africa, the ticket size that a VC would typically have here, it's so small that every penny that they deploy to a founder, they immediately want to see a return. Whereas in most cases, especially early stage businesses, you're really backing the founder, right? The idea might be great, but you need to look at this person and say, can I grow with this person, right? So I think the evaluation of VC coming from outside vis-a-vis local, there's still sort of like a disjointed view around how we actually bring parity into evaluating businesses in Africa.
That was a great answer all around. That was super insightful. And, to your point about expanding to other markets, and it's not always the easiest, and there's regulations, cross borders, things like that. I guess there have been some slow moving changes, and you cut out for just a couple seconds during that, but I don't know if it was mentioned. But for example, and you would know more about this than me, but the tax laws, right? Wasn't there like a free trade agreement that was recently put in place was it just sub-Saharan Africa, or was it the whole continent, right? Something like that would make it easier for startups to cross borders, right? But that's just one example.
That is one example. And we're hoping to see many of those, right? The idea is if Africa can start to open up, that in itself is actually going to enable the startup ecosystem to grow as quickly as possible, right? So I think regulation is key in Africa. If we can get that right, like the inter-trade agreements, if they can really come to fruition, it's really going to change the face of this continent.
Yeah, that's great. And another initiative, which is not regulation or regulatory related, but for example, some of these other companies are doing these subsea cables, right? Google, Facebook dropping these subsea cables, allowing more internet access, more opportunities, and for people to access information, more consumers, more education about growing businesses. So I think that is another big initiative, getting more people online here, which I think will be great for both building businesses and consumers for those businesses, right?
So if you think about those markets, for the most part, they're being viewed as maturing startup ecosystem, right? And then you look at a very nascent ecosystem like Dakar in Senegal. They have a startup act in that market. South Africa is still yet to create one, right? So when you start to think about it, like you assume that there's certain indicators that would reflect what a startup ecosystem look like in supporting founders. But then when you look at it from a perspective of what's happening on the ground to what the government is doing to enable startups, it's actually different. A very nascent ecosystem that doesn't have enough matured entrepreneurs, the government is enabling it through creating a startup act and creating tools to essentially enable and grow that ecosystem as quickly as possible. Whereas other markets like South Africa started from a bottom up, where we started to build startups, and now we're questioning why is the government not actually supporting, right? So those are some of the misnomers that I think we need to talk about and think about. It's like, what is actually a key indicator of a maturing ecosystem, right? Africa in general, in my point of view, we're still yet to see enough founders that have built successful businesses exited, coming back to either build second businesses or reinvesting to enable the ecosystem. So like we probably in the next 10 years, that view will be different. But if you look at what's actually fueling the growth in the West and few other matured markets and North, it's because of there's actually a lot of exited founders over the last 20 years who either came back to build their second businesses that became unicorn, or they are becoming angel investors themselves, or they are starting a fund. So the capital is actually moving along the value chain as a result, creating a flywheel of how you quickly build startups, right? Whereas here we've got a combination of not enough skilled founders who are repeat founders. Number two, the support structure that we are finding across the ecosystem. The support structure, I mean like accelerators, incubators, etc. There is a question of like what type of people are running those ventures, right? Are they ex-founders? Do they know what building business is all about? Or are they giving just an advice, and how are they doing it, etc., etc. So I think Africa will probably get into that maturity over the next 10 to 15 years, where a lot of like these ecosystem builders, like from venture builders to accelerators to angel investors to VCs, it should be dominated by people who have ran startups themselves and understand the space quite well.
I just had when I interviewed Clive Butko of Kalon Venture Partners, we just had the same conversation of we need to see these exits so founders can get liquidity, venture capitalists can get liquidity, and either, like you mentioned, start new businesses, employ more people, or deliver to the ecosystem in other ways, such as becoming angel investors or starting venture firms. You're seeing it in other, what you would call like emerging markets. You're seeing it starting to happen in Latin America. You're seeing it in Southeast Asia, but Africa, yeah, it's still in many ways more nascent to where, especially South Africa, where it just hasn't happened yet. And it's crucial to developing the ecosystem.
To be honest with you, Zep, like I'm a South African, but like South Africa from a startup ecosystem is weird. And the reason why is because I think there's just pockets of excellence, but those pockets of excellence are not coming together to essentially grow as quickly as possible, right? There's a question of like why you have more unicorns and more successful businesses coming out of Nigeria compared to a well-structured environment like South Africa, where we should actually be thriving a lot more. You're starting to see unicorns coming from Egypt, Senegal, Nigeria, and South Africa should actually be leading that pack. And if it's not, then there's a question of like, how is the ecosystem supporting this environment of building startups and being able to get to that exit much quicker. And I think, we hopefully with the Startup Act that's being built and VCs sort of like starting to talk to each other to figure out like, how do we enable this growth quite quickly?
Yeah, no, that's a great point. And these things are, we mentioned people building companies coming back as angel investors, but that's just one piece. The other piece is funding sources, and another piece is that regulatory thing. So having a startup act and having participation from the government to help support the ecosystem is 100% crucial. On that note, looking at the future, because we talked, about Africa in general, 10 to 15 years from now. So if you could take out like your crystal ball, right? Say looking 5-10 years down the line, what are you most excited about when it comes to the African startup ecosystem and the South African in particular startup ecosystem?
I'm going to take an African view as opposed to South Africa because of our focus as Founders Factory. There are two things in my point of view. Well, two things to anchor my answering, right? One is that there is a lot of infrastructural challenges. And if you look at where unicorns are coming from, they came out of solving infrastructural problems. Right. And that's why you get high growth because of you solving infrastructure. And I think there is a lot of work that still needs to be done in the infrastructure space that tech startups can solve for across, fintech, health, agritech, et cetera, et cetera. The second thing is in areas where we're starting to see maturity of infrastructure like fintech, what are the services that tech startups can start to build that can cross sells between countries, right? If you're building on top of mobile money, which other country can it be applicable to, right? It's clear that mobile money in South Africa is not going to work. They've tried it failed, and I don't think it'll actually even pick up, right? So it comes back to that question of like having a unicorn in Africa. It's questionable because to cross sell these things is hard. But I think the next wave of growth is actually going to build on top of these rails that have been created from an infrastructure perspective over the next 15 years, from a services point of view, to then enable customers on the ground to essentially be able to do business in a much easier way across Africa. The third point is we need regulation to enable these things. If you look at the custodian of a consumer today in Africa is government and corporates. So there is a question of like, how does tech businesses get a share of that consumer? And the only way to be able to do that is regulation that can enable startups to essentially participate fairly in offering services to the same consumer. And I think if we can be able to unlock those things, there's going to be a high growth in Africa. Lastly, I would say, if you look at the West specifically, where unicorns are coming from, it is not solving a big problem. It's actually finding a particular space in an entire value chain and you becoming an API for the rest of the ecosystem. Whereas at the moment, the founders in Africa, because of the nascency of the market, we are still caught up on solving the entire value chain. As a result, it takes us 10 years before we actually realize value, right? And I think we're starting to see now where founders are finding small problems and then becoming an API on top of a particular infrastructure. So I think in summary, what I'm saying is what's exciting about Africa, there's still a lot of opportunity for infrastructural tech-based businesses to solve for. And then on top of that is businesses that can realize that there is a maturity on an infrastructure, what services that I can build that can cross-sell between markets. And then you overlay it with that and say, what should the government be doing to enable that cross-trading across markets to be able to do that. Lastly is, can I become an API between particular services so that I don't get caught up in solving the entire value chain, right? And because of those problems, that's where the space comes in. So for a person like you or I building the ecosystem, when I invest, I look at it from that perspective. Am I investing in infrastructure or am I investing in services? If I'm investing in services, are there regulations that are actually going to block me for this business to essentially grow from South Africa to Kenya or from Kenya to Nigeria, right? If I see that regulation allows for that, great. Let me invest into this service-based business because of the market is actually conducive for this service-based business to essentially scale as quickly as possible.
That's a great way to visualize it, right? These different levels with different avenues in terms of like regulation of how those levels connect. That's really unique, huh?
Yeah, and also I can maybe just add another layer to that perspective, right? When you take this idea of infrastructure and services, you can then start to look at it from a sector point of view. Today, when you look at a fintech business, is it wise to invest in a business that's trying to solve for infrastructure? Maybe not, because of the infrastructure layer starting to mature in Africa. So when you look at the fintech business, you look at it from a services point of view, and then you start to invest in services. When you look at health today, there's still a lot of infrastructural challenges. So when you invest, you then ask yourself, what is the opportunity here for an infrastructure-based business in Africa in healthcare, because of that hasn't matured as much as it should be. So maybe there's still an opportunity there to invest, right? If you invest in services businesses, you then need to ask yourself, if I invest in this service-based business, what is the maturity curve of the infrastructure to enable this high growth business long term?
Yeah, it relies on that bottom level, right? So it's always a timing play, really. Wow, now that's a great perspective. Thank you for that. And just last question for you, because I know we're getting short on time here. If people want to find out more about you personally, get in touch, or also just find out about Founders Factory, what's the best way to reach you?
Great. I'm on LinkedIn. I'm actually more active on LinkedIn, but also our website from Founders Factory point of view is foundersfactory.africa. We equally on LinkedIn, and we're participating on most of these ecosystem across Africa. So we are reachable in various aspects.
Great. And I'll include links to Founders Factory and to your LinkedIn in the show notes. Bongani, this was really great. I wish we could do this in person. So maybe it might be that I get back to Johannesburg in the next month and a half before I leave South Africa, and I'll let you know, and I'll be more than happy to buy you lunch. But this was just really a great experience for me to get to connect with you and learn more about your perspective on the ecosystem. So thank you for being so generous with your time.
Great. No, thank you very much, Zep. And I think we need a lot more ecosystem players in Africa to essentially build. As Founders Factory, we are making a small dent, but we hopefully taking the right direction. My hope is we could have a lot more angel investments into Africa, so that we can be able to take a support to the grassroots level in order to build. I think in closing, Founders Factory, we have taken an approach of, if you look at African market, it's a huge geography with less investable businesses. So we then took an approach of like, if there's no one who's going to take that risk at the bottom to essentially find great businesses at the grassroots level and de-risk them and increase number of investable businesses for investors, it's a problem, right? So we have taken that approach of like finding businesses at a very grassroots level and de-risking them. The question is, can we work with very early stage investors and angel investors to essentially go into a journey with us to be able to build Africa together?
Yeah, let's make it happen. Let's get more investors here. This is why I'm here. So great. Thank you again.